Good afternoon. It is Thursday, January 4th, 2018, 4:05 p.m. Markets just closed. So much to talk about, people. I don't even know where to begin. But I think I'd like to begin with a comment that I received. One of our listeners, he posted a comment saying that I was too emotional. And you need to have a calm, clear head, to be in these markets. And I guess he was referring to yesterday's video. Interesting comment. And I really, I don't want to say I took exception to it, but it really struck a chord, I'll put it that way. Because if there's one thing I'm not, regarding these markets, it's too emotional. Okay? Now, yesterday I might have been a little animated, okay? But I never, ever let my emotions get in the way of my decisions. So it was a very interesting comment. I've been in this gold market, well, now that we've turned the calendar, 18 years. And to be in this gold market, you have to have nerves of steel and a cast iron stomach, okay? And being a one-time professional handicapper, the one thing you cannot have is emotion, okay? Because it all goes back to what I've been saying, value and edge, okay? So when the public makes a horse even money, okay, and you make a horse 2-1, okay, and the public is taking, a 16% disadvantage, right, or you make a horse 3-1, and the public is making that same horse 5-1, and you got a 9% advantage, you say, how could everybody be so wrong, okay? You have to leave your emotions, okay, at the front door, okay? So I agree, you have to have a calm and cool head, no matter what speculative game you're playing, and they're all the same when money is involved, because it's always going to be based on two things, greed and fear, okay? And right now, I see a lot of both, okay? I see a lot of greed, okay? Because everything is melting up on this frigid day. And I see a lot of fear of missing out, right? And I was talking to my wife this morning, and I said to her, there's only always will be two things, greed and fear. And I said, I think greed is more stronger. I said, people don't mind losing money if everybody's losing together. At least we're all going down together. There's some comfort in that. But if everybody's making money and you're not joining the party, if you're an outsider, no, that's a stronger fear, a stronger emotion. So maybe I'm wrong, but that's how I look at it. So in this comment about I'm too emotional, no, I'm not too emotional, not at all. Might be very animated, all right, with what's going on with our money, okay? When you have a bunch of eggheads trying to run the biggest economy in the world, which soon won't be, using a junior year textbook, yeah, I get a little animated. But believe me, I have a calm and a clear head. So just wanted to mention that. Let's talk about the markets now, okay? So much to talk about. I want to look at this 10-year, all right? Before I do that, I want to read a little article, very short. David Tepper, right? This David Tepper of Appaloosa Management, one of the most respected investors in the hedge fund business, told CNBC on Thursday, just today, the bull market still has room to grow. Explain to me where this market is rich. It's not rich with the tax thing that just changed earnings projections. With earnings forecasts going up and interest rates where they are, how is this market expensive with interest rates where they are? I don't see the overvaluation. World growth is higher. Tepid said in a phone interview. There's no inflation. There's no inflation. The market coming into this year doesn't look rich. In fact, it looks almost as cheap as coming into last. This is flooring me. All right? There's no inflation. It's as cheap as last year. I'm getting animated again. I gotta laugh. The tax overhaul, which President Donald Trump signed into law last month, lowers the corporate tax rate to 21% from 35%. I'm not buying that either. It was already low. All right, but anyway. The billionaire investor's comments that the market is nearly as inexpensive as the beginning of 2017 is noteworthy since the S&P 500 rallied 19% last year. Tepper said bond prices are the key indicator of whether the stock market can keep going higher. And he's right. He's right. It's all about these bond yields. The market can't go down until the bond market gets hit. It's amazing where interest rates are, he added in the interview on CNBC's Fast Money halftime report. Appaloosa managed $17 billion as of March. I think this is a real powerful interview. What's coming out of his mouth. And this is the attitude. The market can't go down. Right? I ran into my friend a couple of weeks ago, jokingly asked him, where's stocks go? Oh, stocks are going up. Right? My wife's girlfriend, that same morning, right, went to see the broker that we used. They got into a conversation, where's stocks go? Stocks are going up. Right? The market can't go down until the bond market gets hit. It's amazing where interest rates are. He said a mouthful. He really said a mouthful. And I want to look at these interest rates. This 10-year, 2.45. I said watching the 10-year was watching paint dry, right? All of last year, everybody wants to be the one to call the end to the bond bull market. That's been going on for 35 years. They want to be the one to get all the glory. I called, the end of the bond bear market. That's emotion, and that's attitude, and that's a bankroll killer, okay? It was like watching paint dry. I said 2.4, that's the first line in the sand. And if you look at that first horizontal line, right, that was 2.4. And all year, it banged up against that 2.4, right? See it? My finger. Right here, 2.4. Broke a little, but they banged it right back down, 2.4. That was resistance, right? Practically the whole year. It went nowhere. If you look over here, very early in the year, right? It had been in a range between that 2.4 and 2.5, right? And now over here where I noticed the breakout at 2.4, and I said, well, that 2.52 level is the key, right? And they banged it down, right? And now it went back down almost to 2.4. You see that it hit that 2.5? Came all the way back down to 2.4, touched it, came back off it. It's 2.45 now, right? So, is this the new range? Is this the new range that we're in? This 2.4 to 2.5. And how long will it stay in this range? Okay, perhaps, just perhaps, right? Bond market, 10-year. New trading range, I have a question mark, 2.4 to 2.5. Is 2.4 now support? Okay. Is 2.5 now resistance? Has it established a new trading range? And if so, these rates are still extremely low, meaning he's right. Stocks have nowhere to go but up. So we have to watch this. Will it be like watching paint dry again in this 2.4, 2.5? We have to see. All right, I'm watching that. But if you look at everything else looks like it's starting to melt up. This big inflation mystery, right? They can't find inflation. Let's look at oil. Let's look at oil, which is breaking out, $61.95 a barrel. Now, the first chart is a 5-year. A 5-year chart, right? Came all the way back down. It hit a low in early 2016. Look at what it's, and that low, that was in what? The 20s, right? The mid 20s. A barrel of oil. It's now it's almost tripled. $61, right? It slightly broke out. There's nothing between 61 and 100. There's really nothing. So talk about inflation. Okay? This thing can easily get to 100. I'm not saying it's going to get there overnight. All right? But this looks like the trend is clearly in place. All right? But this is what they want. This is what they want, inflation. It's easy to get inflation. Let's make oil $100 a barrel. Let's make gold $5,000 an ounce. Presto changeo, we have inflation. What's so hard about that? Who is she kidding? So look at that. Nothing between 61 and 100, really. And now this is the yearly chart. That's the trend. Look at that thing. Up, 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 and away. So there's your inflation. What they take away, right? Taxes. They're going to lower taxes, right? They give you something. They take it away, right? Higher oil prices. So where are you? You're right back in the middle. Where are you going? Copper. The 5-year chart of copper. And I said, this is Dr. Copper. You got to watch Dr. Copper, right? And I was fooled myself because when I started talking about copper, I wasn't convinced it was going to have this great 2018 that everybody was talking about. But look at what it's done. Look at that horizontal line that I drew. It's banging at the door. The line underneath where I have copper, right there. Not the one above it, right underneath. Banging at the door of that 3.26, $3.30 level, right? And why is this happening? It's happening because of the dollar. The dollar is the sacrificial lamb, right? And that's the playbook, right? We have the king of debt, right, as the president. Atlantic City Casino, right? Bankrolled, financed with cheap money, right? The dollar is going down. Now, the dollar, 91.91. Got back down to that 91 handle, right? I said you got a 91 handle, you're going to see a 90 handle. It went up yesterday, right? A little. Right back down, 91 handle. The moving averages are all starting to align down. The 50-day moving average sloping down. It's under that. The 100-day moving average in green sloping down. The 200-day moving average in orange sloping down. This chart looks like the dollar is ready to fall out of bed. Okay? Again, not overnight. All right? But the trend looks clearly in place. All right? Now, it might be starting to be oversold with that 200-day 95. Okay? So nothing goes straight down or straight up. So we could see these little counter trend bounces. Okay? 91.35. That's the low. Looks to me like we're going to test that. And if we take it out, well, you know, remember the Bunchkin bottom, right? She didn't want to get paid in dollars, right? She didn't even want to get out of bed for dollars. Those days could return again, people. Wouldn't that be interesting? Okay? She's a little older by now, but, you know, I won't go there. I want to show you another chart. You know that Fiore, right? That F.V. I said on the next pullback I'm buying, right? I woke up today, right? And it was down. It was down like 6%. I didn't even get a chance to buy. Look at this stock. $1. It's up 12.36% the time I printed this. That's that high volume pivot, right? It was down today. I was surprised to see it down, and we'll get to that. All right, so much. And I said quite a few times, if I see a pullback, I'm tempted to buy, right? I saw it. Next thing you know, boom. Look at the volume. The high volume pivot. This thing is up 12%. All right, if I miss this, I miss it. But to me, this is flashing something. All right? Everything looks to be melting up. All right? Gold was up $12 a little while. It's up $8.90 now. $13.21. It hit a high at $13.26. I got that key level at $13.40, right? It's banging on the door. Right? It's right there. Now, my friend, we have these interesting conversations. We were talking about gold and oh, by the way, he's already got buyer's remorse with his Litecoin. All right, he's already got buyer's remorse. He can't wait to get rid of this thing. He's hoping he can get even and never touch them again. All right. So he's already got buyer's remorse. But we were talking about gold, and he's like, well, I expect it to, continue to stay in this range. Markets don't change for no reason. And my rebuttal was, no, there's plenty of good reasons why this gold market is going to change. Okay? Because I think this inflation genie is out of the bottle. Okay? So I wouldn't say there's no reasons. There's plenty of reasons for it to change. All right? So he used the word expecting it to stay in this range. I said, no, I can't use that word, expecting. I'm not expecting it to stay in this range. And there are good reasons for it to break out of this range. So we'll see, people. We'll see. All right? Time will tell. But that's my key right there. So gold is having a big day. Silver is having a big day. The stocks are having a big day. All right? I mean, everything's up across the board. You could have a dead fish and a tape recorder up here and just say the same thing. Stocks are up today. Stocks are up today. Stocks are up today. It'd be the same thing, right? The VIX. The other day, the VIX had an 8 handle, right? Nobody has a care in the world. Not a care. I mean, it's 9.12, the VIX. Everything it's on autopilot here. We talked about oil. We talked about copper. NUGT up again, 1.63%. All right, that was down earlier too. And you know what? Brings up a point. Last night, I had said, or in yesterday's video, I said, those minutes came out, boy, and they really infuriated me, those minutes. They whacked gold. It was clearly an excuse to whack gold. I didn't even think they had a chance to digest that double speak, okay? They hit it. Gold came back. It was just a gold cartel, right? And last night I was looking at gold, and it was down. It was down 5, 6, 7. It went down about 13.06, if I believe. I said, all right, well, we got to see. When I woke up, I expected it to be down, Okay, maybe it was up. and continues to go up. They're buying these dips. They're buying the dips. Something has changed, all right? So, and it's showing in the stocks. A couple of other things, and we'll wrap this up. I noticed Sears and Macy's is closing more stores and laying off more people, right? So these Fed people, right? You can't have the economy, these employment, you can't have it overheat. That's inflation. That's how we're going to get inflation. With this mystery, why isn't the wage growth going up? Which will ultimately let inflation go up. That's that Phillips curve model that has been discredited, okay? That has been disproven, okay? You look at the stagflation of the 1970s, right? They had high unemployment and they had high inflation, okay? But these Fed heads are still using the Phillips curve, right? It's nonsense, all right? They get their information from a junior year textbook. So we can have high inflation with high unemployment, all right? You got all these people doing their side hustles, all right? But people are getting laid off by the thousands. So I think the inflation genie is out of the bottle, okay? And they could get high inflation with high unemployment or multiple jobs. You got your day job and you got your side hustles, No wage growth. We'll see. Anyway, that's about it. Beautiful day out there today. I mean, all things considered. Very cold weather. Snow isn't too bad. I was out before. Dress warm. If you can get out, get out. And that reminds me, now that I mention it, I always kind of conclude my videos by saying get out, renew your mind, right? That helps to take the emotion out of things. Go for a walk, right? Renew your mind, right? Clear your head, remain calm, right? I practice that, okay? It's needful. So if you can do it, and maybe this isn't the day for that outlet, but there are other ways. Anyway, interesting times, people. Thanks for your viewership. Lord willing, we pick this up tomorrow. Ciao.